The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Well, there's an insurance growth and income stock that is on the move, and it's on the growth and income radar. Todd Bunton, our growth and income strategist, actually spotted it. Now he wants to tell you more about it. So this is a property casualty insurance company, but not your run-of-the-mill property casualty company, right?
That's true. They write mostly standard commercial lines, so general liability for companies, workers' compensation, and auto. Those are pretty standard, but they focus primarily on smaller businesses.
So they're regional.
So they're considered a super regional.
Yeah.
Most of their businesses. Well, just in terms of geographic.
Okay.
They're mostly eastern U.S. to the southeast and the Midwest, but they're not so much out west. So they're not as big as some of your other property casualty insurers, which I'll highlight here in a little bit. Mm-hmm. But a nice little business. They have a market cap of $1.5 billion, headquartered in New Jersey. But if you think about the insurance business, the pricing there, what you pay in your premiums and stuff, that's been improving. And that's led to better underwriting profits.
Improving for the insurance company.
Exactly, yeah. So it means higher rates. So their renewal rates are about in the mid-single digits when they go to renew policies, and that helps their underwriting profits. Their combined ratio in the fourth quarter, which basically takes their loss ratio, so what they pay out in claims, and then all of their overhead expenses, what they pay, the corporate office people and the insurance agents and all that, was about a little less than 92%. In the fourth quarter of 2013, it was over 97%. So you can see that trend's improving. That's leading to stronger profits, and that helped lead to a very solid beat on January 29th. And also the company had a little bit lower net investment income because if you think about their business model, they take in those premiums, they invest them primarily in bonds, fixed rate securities, but then they eventually pay those out in claims. But while they're investing them in bonds, they're obviously very sensitive to interest rates. Well, with lower interest rates, they're realizing lower interest income on those bonds, obviously, but the value of those bonds are rising. So not a ton of interest rate risk here either. The duration of their portfolio is around 3 years, which means if interest rates do shoot up, their investment portfolio is going to hold up fairly steady compared to some of the other competitors, and they're going to start realizing higher investment income on that. So analysts revised their estimates significantly higher after the fourth quarter beat for both 2015 and 16. As you can see here in the price consensus and EPS surprise chart, we don't have the 2016 consensus up here yet, but you can see 2015 estimates just boom, shot straight up. After that, the stock price hasn't really responded yet because this is a smaller company. It's not heavily followed, so there could be some opportunity here. And also on the income side, they pay a dividend that yields 2.1%.
That's what we like to hear.
Yeah, so pretty solid dividend. They held that steady for years and years, but they recently increased it in late 2014 from 13 cents a quarter to 14 cents a quarter. Good sign that management feels that these profits are sustainable, that their business model is improving, and they want to return that cash to shareholders. And if you look on the valuation side, they traded just 11 times forward earnings, so pretty cheap. You can see most other property casualty insurers. You can see we have Travelers in here, Chubb, Ace, all trading kind of below where the S&P is, all with pretty solid dividend yields, but the Zacks rank here, the earnings momentum for Select is very solid, and that's why we like it. And expect that good outperformance over the next 3 to 6 months, especially given that solid dividend yield. So this could be one to watch.
All right. Do you own it?
I do not.
All right. Check out other stock picks and stock picking strategies on our website, Zacks.com, if you're watching this out in syndication land especially. And you can link to all of that stock information right off the homepage. With Todd, I'm Terry Ruffalo.